I pulled out of the markets here this morning about $5,400 on two symbols, NVIDIA and BABA, and but I did it on three separate trades. So I want to start off by going over that. All right. Now take a look at. I want you to take a look at NVIDIA down here. Now this to me is a great signal to go long. Why? Because in one giant, powerful move to the upside, let's fill it in from low to high, you basically wipe out all of the red in one giant, instant, powerful bar. All right? And so to use this as a buy signal with a stop under the low, I think is very smart. Now, why is this smart? And you're underneath? Well, look at the distance to the next area of resistance, the 20-period moving average. All right? So here's the bottom of your Fab4 and the 20-period moving average. So you've got several dollars. You're several dollars away from the first or the very next area of resistance. If you were to take this and put that here, now it's not that great of a play. So location, as you know all the time, I'm always talking to you about this, location is very important. But that's not the play that I took. I didn't catch NVIDIA's move up. JR, one of my traders, did. That was very nice. But I caught the short. And this is the type of stuff that I'm not overly excited about explaining it to you. I will, but I just know that some of you are going to do things like this and you're not ready for it. So what I told my traders this morning is that when the stock was producing this bar, I'm like, shoot, I missed the long. All right, I'm going to go for the scalp short. Now, I'm going to start at the first area of resistance, which is the 20-period moving average, and the round number of 175 together. So I've got the first area of resistance, the 20, and the area of 195, the round number, in the same area. So I told the traders, I'm going to start layering orders for sale, for short, right under 195 up. Okay? I call this pyramiding. You start off with small layers, and then as you get higher, it gets bigger layers as you move deeper into resistance, right? So, first couple layers of my short orders get filled. Move up, move up, move up. Boom, boom, boom. So I'm filled nicely. And then I'm out in that area. There's the scalp. Now, why this area? Well, very simple. You see, big giant bars, I've taught you that a regular bar, boom, you're working from high to low. If it gets big enough, you're cutting the bar in half. If it gets stupid big, you're cutting the bar in thirds. So these are your two scenarios, right? You're not cutting the bar at all. The reference point is under this bar. This you're cutting, this gets moved to the middle of this bar. You're cutting it in half. And this gets moved to the top third of the bar if it's super big. So for me, this is super big. We draw it in. This is version 3. 1, 2, 3. You got to cut this bar in thirds. Boom, boom. There's my cover, 1/3. And that's basically what scalping is anyway. Trading is going for half. So here's the drop to the third. Tell me you understand this concept in general. Scalping is going for the third. You got it? Trading is going for the half. Scalping is going for the third. You definitely want to know the distinction between the two. Okay? Now, guys, when I'm going for a scalp, I tend to play heavier. You understand? So the shorter my trade is going to be during time. So I'm filled here, but I'm out there. That's 4.5 minutes or so, basically. 6 minutes tops. Okay? So it's a very short duration. So if my duration is going to be shorter, I'm going to play higher, because in this shorter period of time, the odds of something disastrous happening in 6 minutes versus 6 hours is much smaller. So my risk is smaller on a scalp than it is a trade. My risk is smaller on a trade than it is a swing trade. A risk is smaller on a swing trade than it is on a wealth trade, a long-term play. So, the shorter your duration. And what's interesting is that a lot of people think the reverse, that if you're short-term trading, it's riskier. No, it's less risky, because you're not subjecting your money to all the unpredictable things that can happen in life, like a sudden interest rate cut, or some earnings that hit the market, or war breaks out, or Trump says something so stupid it sends the markets reeling, whatever it is. I'm not meaning to be political here or anything like that. I'm just saying. So, so the time is a key element in risk. So on a scalp, I'm holding things a shorter period of time and therefore taking a bigger position. All right? Now remember what I've explained to you all the time. So guys, take a look at this. Let me show you something. Well, I don't know, some of you might understand it from the long side a little better. You guys have seen me do this before, but repetition has a value. All right? So let's do it from a long side. A bounce from 0 to 100% happens one time out of every 10. So the person going for this whole move will fail 9 times, but make it once. But if you go for 75 cents, you get 2 times. Interesting. But if you go for 50 cents, look what happens. You get this 6 times. Uh-oh. Now you're right more than you're wrong. But if you go for 25 cents, or 25 level, let's not call it cents, it could be just levels, right? You get this 8 to 9 times out of every 10. So a professional wants to live most of his life there. And this is why, but now this professional who lives most of his life here will miss out on the 50s, will miss out on the occasional 75s and that rare 100. So that's a lot of money left behind. So how does the professional make up for this lost money? He increases size to compensate for missing out on these. Because if I was going for 75, I would play smaller because my risk is bigger. Longer period of time, bigger risk. My time duration is short for 25, so I can play big size. And the big size helps me make up for missing 50s, 75s, and that rare 100. And so this is where your professional with size lives. It's where your market makers live. It's where all the professionals live, that short-term oriented professionals. So when you take that concept of here, I'm shorting here, this is 100%, that's 0, and this is 100. This is half, this is 75, and this is that first level, short, out. And that is where my consistency comes into play, or anyone who's consistent like I am comes into play. I'm right 9 times out of every 10 most of the time. And in the 1 or 2 times I'm not right, I can usually get myself out of trouble. Does that make sense?